Hello and welcome to this episode of Nucleus Wealth Empower, where I go looking for what the good life is and how finance can support and empower us in achieving that. I'm Shelley George, Chief Operating Officer at Nucleus Wealth, coming to you today from the lands of the Wurundjeri people of the Kulin Nation. So after a extended summer holiday, we're actually finally back today to continue the discussion we left off with Wadzi just before Christmas, namely investing and investing in shares. And to do so today, we have Nucleus Wealth client Philip D'Souza. Philip, like Wadzi, has had a career in financial services, largely in risk management, and is going to talk to us today about his self-directed investing, as well as why he chooses Nucleus Wealth to manage his super. Welcome, Philip.
Thank you, Shelley. Pleasure to be here.
Pleasure to have you. Okay, so before I forget, a quick reminder that please keep in mind that any advice in this show is general in nature and it doesn't necessarily relate to your personal circumstances. So if you would like to discuss anything further, you can get in touch with us on 1300 623 863 or contact@nucleuswealth.com. And if you haven't already and you like what you see, please subscribe and click the notification bell if you're in YouTube to be notified when Nucleus Wealth goes live or has a new webinar to watch. Or, of course, you can follow us on your preferred podcast platform to help us grow our show. Okay, let's get into it. So, Philip, I do want to do a lot of work in understanding how you've got to where you are now, but I actually want to start with actually a brief introduction to what your investments are today and how they're structured.
Absolutely. So my superannuation is managed by Nucleus Wealth, and I have an auto super investment which I manage myself.
Okay. Why have you decided to go with that structure?
Okay. Look, there are multiple reasons for that. Number one is you don't put all your eggs in one basket. I enjoy investing, but at the same time, I realize that there are other fund managers out there that have a philosophy and greater extent capabilities when it comes to risk management. I believe Nucleus Wealth is one of those providers out there, which fits with my insight as to how exactly markets function. So I'm very comfortable with Nucleus Wealth as a provider taking care of my retirement money.
Thank you. Nice plug there for us. So you mentioned in there your insights about how you've experienced markets work. So do you want to talk to us a little bit about that? And I guess also the next question I've got planning on asking is, where did you begin and what was your journey to get to this point now with these market insights and thinking this is the best structure for you?
Okay, fair enough. I'll answer the second question first. What was my investment journey? So my investment journey started in 2008. I was studying my master's in commerce at Macquarie Uni, and I bumped into this book by the name of Buffett, The Making of an American Capitalist by Roger Lowenstein. And that set into role a lot of self-education my end involving investments. Now, some of the key lessons which I learned involving investment revolve around patience, discipline, rationality, which until this day are very important. At the same time, I was fortunate enough to be briefly mentored by a lady by the name of Carolyn Roden, and Carolyn frequently features on CNBC back in the United States, and where I was introduced to the art, and I say art and science of technical analysis. Look, from there on, Shelley, it was a lot of self-education, involves a lot of reading if you want to invest by yourself, getting that foundation right, not only from a technical point of view, but also from a macro point of view, from a fundamental point of view. And I will say, if you do not love reading, leave your investments to the professionals.
It is a lot of work, isn't it?
Absolutely, no doubts in that.
Okay, so that's where you began. And as I think I mentioned before, so you talked about some of your market insights as being a result of why you've decided to manage some yourself and have others manage some for you as well. So, are you willing to share some of these insights for us?
Absolutely. Let me try and share those insights in terms of a philosophy of my investment and how that's evolved. And a lot of this philosophy also, I believe, having been a client of Nucleus Wealth, I believe these philosophies also exist the way in which you manage your clients' money with respect to best interest duty. And that's one of the reasons why I obviously choose to have my retirement funds managed by Nucleus Wealth. Coming to the philosophy of my own investment structure, I will say that a penny saved is a penny earned. And what I mean by that is risk management. Risk management is often ignored when it comes to effective funds management. And the reason why I say that is in my portfolio, I try and minimize the drawdowns because the percentage of the drawdown in your portfolio at its high is incrementally proportional to the time taken for the portfolio to recover to its original level. And because of that, minimizing these drawdowns, be it through rotation of your assets, be it through moving your money into cash, be it via hedging, is so very vital. Another philosophical aspect of my investment strategy is connecting the dots. And what I mean by that is it is important through research, and that research involves a lot of reading, listening to podcasts like that offered by Nucleus Wealth. And with technology, there's so many other opportunities available where you can listen to other fund managers and so on. But more so identifying the narrative behind a story and the macro theme behind the story. So if you're looking at it from a point of view of what's happening today in Russia and Europe, the macro theme as such could be the energy sector. And the narrative behind, to a great extent, is the politics, the fear mongering, war. So a lot of about this involving my strategy is learning to filter these aspects and connect the dots as to what potentially could happen next, influencing a sector. Now, at this stage, I'm looking at the cybersecurity sector because the likelihood is the narrative where in the United States would most likely want to conduct a few cyber attacks on Russia and vice versa. So looking at it from that point of view, I try and fit that same narrative within my system, which is a volumetric based system. It's a proprietary indicator which I've developed myself.
Yeah. So actually,
And
before
see
you
if it
keep
gives me
going, I might just jump in there. Sorry if you're not meaning to be rude. There was just a
Yeah.
lot there that I wanted to ask
no.
about. So the
Yeah.
first thing I wanted to ask about, to just get a clarification about it, was you spoke about minimizing drawdowns. So for those of
Yes.
us not up on the lingo, a quick definition of what is a drawdown?
Okay. So a drawdown is basically the percentage drop in your portfolio from its all-time highs. So let's say, for example, your all-time high in your portfolio is 10% and the market drops 4%. So the drawdown from that high to the current level is 4%.
Okay. So it's like if you're at 110, that's your all-time high dollars, let's just say, for the sake of kind of communicating the idea. You drop 4% and you lose $4.40, if my maths is okay, hopefully. Is that about right?
Yes.
Okay. So that
is about right. So that is the drawdown, because end of the day we have to factor in the concept of time. when there's a drawdown, because sometimes what tends to happen is there's a massive drawdown, but what's the recovery time for that drawdown?
Yeah, exactly.
Because that recovery time is so very vital. That is money not earned.
Yeah. Well, but also, I guess how another way of looking at it is that if you had managed to avoid that drawdown, and you waited for the market to rally again, that circa 4%. I know the math isn't spot on there, but to get you back to $110. Well, imagine, like you said, you'd minimized your drawdown and managed to stay at $110, and then the market rallied 4%, then you'd be up on that as opposed to just back to the same level. So I think that's sort of what you're talking about in this time aspect. Am I right?
Correct.
Yep. And that's certainly,
absolutely, yes.
As you said, you were interested in Nucleus Wealth because of this philosophical alignment. And that's really, that sort of nails it on its head in the sense that we're trying to minimize those drawdowns, because we think as well that people get emotional alpha. Maybe that's a too technical way of terming it, but there's a benefit people get from not seeing their money fall like that, a psychological
absolutely,
one as well as it not going down.
I agree with you, and it's one thing to say that, hey, you know what, I'm going to be bravado and sit through the ebbs and flows of the market, but when it happens, trust me, when it happens, most people panic. But more importantly, when it happens at the wrong time. So say, for example, you have a client out there in their retirement phase, drawing down money from their pension account, and at the same time, combine that with a big drawdown. Now, how does that impact the long-term performance of the portfolio?
Yeah, well, they're cashing out the loss, right? Whereas if you can afford to wait until it goes back, then at least you've lost that time, but you're not cashing out. You're not realizing the loss. So it is very interesting.
Spot on. Exactly.
But what I love about this is it's so easy to say it, but obviously doing it is the whole other thing. And when you were talking about the way that you connect dots, I thought that was, to me, really interesting, because technical trading can sometimes be about ignoring the economics. So obviously it sounds like your process, you think about both parts of them. Do you want to talk to us a little bit more about that?
Yeah, I agree. Look, fundamentals and the macro theme builds the picture. Technicals, to a great extent, does the painting. So what I mean by that is my system, which is a technically driven system, would not function effectively ignoring the macro view of the market and connecting those dots, as I've said, because end of the day, when markets react, they react quickly, and having an overview of the macro theme of the market does help an investor with respect to being prepared as to what potentially could happen.
Do you think as well having that macro view helps you, I don't know if this is the best way to put it, but in a sense avoid traps? Because something might look really great technically, but
Yep.
You look at the macro and you go, that doesn't make a lot of sense. Maybe it will work technically, but it might not as well, because it might end up breaking down in a sense.
Yep.
Yeah.
That's a very good question, and it's a yes and no,
Okay.
because you also, in this day and age especially, you also have something called the narrative, and the narrative can be very powerful, especially more powerful than the overall macro theme. Because the way the world is structured with respect to information flow these days.
Yeah, definitely. So, for those of us who haven't worked in markets, what's the narrative, and how does it differ from the macroeconomics?
So, look, I would say macroeconomics is more substantial. There's a lot of data that is factored into your decision making. It's more rational.
Yeah.
The narrative is more emotional. So coming back to the example which I was giving about the war in Ukraine, there's nothing but emotion to a great extent. How people react, how markets react, how potentially, for example, the media portrays what's happening in Russia. So that does tend to influence how self-directed investors to a greater extent and the retail market, which is huge, uh, reacts to either buying or selling shares, for example.
Yeah, right. Okay.
So it's a whole different it's a different ball game. Is the narrative always right? Um, that's a great question. But in the longer term, if you look at it, uh, it's the macro that always tends to play out correctly.
Yeah, okay. So I guess in the short term there can be a disconnect between that narrative and macro, and then the narrative probably is, I guess the way I think about it is what markets are pricing in at that point in time. And so if you get that disconnect, that can give you an opportunity to make some money, to exploit that disconnect.
And and I think you hit the nail on the head when you say that. Yes, exactly.
Okay, so uh, my impression of all investing is that it's a lot of work. I don't think that that's actually quite right, but that's probably because I've worked in investing for most of my career. But
Yeah.
certainly that's my impression of technical investing. Do you want to talk to us about like, the day
Yeah.
to day? What does it look like? Is it a lot of work, or am I, am I wrong?
I think so when you get started, and when I say get started, for the first 5 to 6 years, speaking specifically about technicals, it is a lot of work. Screen time is very important. You cannot be someone who spends, 20 minutes looking at charts and trying to figure out various patterns and indicators and say, oh, this works, oh, that does not work. Because there's a lot of cognitive bias that can also happen when you tend to focus a lot on technical analysis only. And the reason why I say that is, the mind likes to see what it wants to see when you look at a chart. And that's one of the main reasons why I have systematized my approach to technical analysis. And rather than having the eye do the job, uh, even though the eye does a lot of the job, but what I've done is I have semi-automated some of my concepts to give me triggers,
Okay.
if that makes sense.
Yeah, absolutely. So, sounds like a lot of programming work went into, and I guess obviously having done the work beforehand so you could do the programming, to creating a system that will give you a significant amount of insights that then you can work through.
Yes, and look, one of the dangers with technical analysis, to a great extent, is it's very easy to identify something in hindsight, but when you're in the moment, it's a whole different story. And that's where in your screen time and experience and proper understanding of the fundamental basis as to why markets move is so very important.
Yeah, that makes sense. So, okay, so now that you've got your system set up, what does it look like on a day-to-day, week-to-week basis in terms of a time input from you?
Hmm. Look, it's consistency. And what I mean when I say that is I am constantly reading a lot of research. So on the weekends, for example, I'm spending a lot of time reading. Now, if you do not love reading, as I said earlier, leave investing to the professionals, because reading is perhaps 30% of the game and there is more involved. And that ignores the fact that people have a life to live, right?
Absolutely.
They have other things to do. I mean, even I have other things to do, but to a great extent, I also have a character and personality which is curious. You have to be curious. I love reading.
Okay.
Coming to your question in terms of the amount of work involved, be prepared to use your spare time to research, doing reading. And when I'm saying reading, it's not only one side of the thing. So you have to read the for and against. And then after that, try and correlate that information with respect to your own judgment to form a thesis behind your investment. And in my case specifically, then I take that thesis, that premise. For example, I mentioned cybersecurity earlier. So I will take that premise, identify the right instrument, which will be an ETF specifically for me, and then see if that ETF fits within the technical system which I have developed that gives me a trigger to either buy or sell. So it's not a simple answer, especially considering the fact that once you enter the market, there's another stage. It's called managing your investment, because things don't always go right. And then we come back all the way to risk management.
Yeah, absolutely. It's definitely a cycle. It's not a process that starts here and ends there. It's a circular one, right?
Yes. And markets in their own way are cycles, right? And being sensitive to those cycles requires the individual to stay up to date with multiple facets of society, politics, numbers. What do they mean? How do you translate that information into something tangible that allows you to invest in an instrument?
Yeah,
so
absolutely.
if you have unemployment numbers, for example, come out, say in the US, it's very easy to say, oh, job numbers are high, job numbers are low. But okay, so what? What are these job figures? Do these job figures actually account for the fact that people who are unemployed, which is the case, by the way, are not actively looking for work? So what is the real unemployment figures versus the unemployment figure that just comes out through central banks?
Yeah,
that's what I call alternative data. So
yeah, you have to look through the headlines, right? Oh, go ahead. Sorry.
Yeah, it's like being a detective.
Yep, absolutely. So you touched on instruments there. You mentioned sometimes you look at ETFs, and I know you mentioned at the start that you think of cash as your ultimate hedge. I actually wanted to clarify that in the sense of hedge. Like, what's a hedge to you?
So, a hedge to a great extent to me is all about minimizing your drawdowns. Now, okay. Depending upon your philosophy, the mandate of the fund, different people tend to do it differently. Some people might short the market. Some people might buy inverse ETFs, for example, to hedge the other end of the spectrum should the markets be dropping. In simplistic terms, that is what hedging is. Now, obviously, from an institutional perspective versus a retail investing perspective, the way in which it's done could differ.
That's really interesting that you mentioned the benchmark, because now that I think about it, it's probably the hedge is there to try and stop you deviating from your benchmark. And so, as a retail investor, all you really are looking for is your money to go up, right? That's why you're investing, to make a return. So, I think it's really interesting the way you've connected the dots there in terms of cash is the ultimate and obvious hedge in that sense, because it can't be drawn down unless, there's problems with the bank paying it out. But let's put those aside for this discussion.
No, that's a good point you make there, because another argument which someone might make that it's inflation. If you keep your money in cash, inflation is eating it away anyways. But at the same time, if you have your money invested in, say, bonds, for example, you may experience a drawdown because markets are so very correlated these days. It's really become difficult to diversify effectively and hedge your portfolio.
That's really good point. We're seeing equities go down and bonds go down at the same time, which is just incredible.
Absolutely, absolutely. So what does the investor do? And in my opinion, obviously this is my opinion, it's no financial advice, that we are in a stage wherein keeping your powder dry, and what I mean by that is holding cash, can be a good alternative to consider as a hedging feature in your portfolio. So when the right moment comes, you have that spare cash to enter the market at the right stage.
Yep. Once again, all sounds so good in theory. It's the the art and the science is obviously putting it into practice, and market timing is a challenging thing even for the professionals.
Absolutely, and you never get it right. And
well, it's about managing that, and not. I mean, well, my experience would be that you don't make binary bets, sort of one or nothing. You've got to think about the world doesn't exist in binary outcomes exactly. So you've got to think about all of the different outcomes and then construct something that at least is going to address the most probable ones, and that normally doesn't look like an all or nothing bet.
Yeah, and I'm glad you bring that. Construct something, because every individual looks at it from a different point of view. See, when I started investing myself, I was doing it for cash flow. But then later on down the line, I realized that my personality fits more of a growth investor. I'm not looking for cash flow.
Yep.
What I'm looking for is growth. And that is what gives me the drive to invest. So it is one thing for an individual to sit down and try and identify why they want to invest. But it's always good that if you can get a professional, sit down with that individual to try and really understand, why do you want to invest? Do you want to invest so you can save a deposit for a house 5 years down the line? Do you want to invest to buy a new car? Or do you just want to invest to get some, cash flow through dividends coming in, which supplements your normal income? So sitting with a professional to actually understand the psychology of your own investment basis
and desires.
It goes a long way in the satisfaction.
Yeah, I love that you came to that, because I had it as a question to eventually come to. The show this show, Nucleus Wealth and Power, is really about getting people to think about what is it they want from their lives, and then helping them to use money and financial knowledge to get to that state for their life. So it's not sort of investing just for the sake of investing. It's to facilitate a goal, which is, if you speak to a financial advisor or a professional, like you've just said, that's where they're going to start. What is it you want to achieve? So I really wanted to ask you, talk about at the start of the show, trying to help people achieve a good life. For you, what is a good life? What is that? Maybe you've already achieved that goal, but what is it?
What is a good life? Gee, Shelley, that's $1 million question, isn't it?
Absolutely.
Well, to me, sticking to the financial component of things, to me, having a good life is security. Security is important, and it is something important to most people, but from an investing point of view, to me, having a good life is being accountable for my decisions. And that's one of the reasons why I invest by myself. But at the same time, a portion of that accountability involves hedging. How do I hedge my overall life with respect to future retirement? Therein I bring a collaborator, I would say, like Nucleus Wealth, that knows what they're doing, their own the ball with investing, and I let them do what they do well, and I try and do what I do well.
Fantastic.
So a lot of it is about being accountable so I can live in the moment.
Yeah, great. Fantastic. Living in the moment. I love that. I feel like that's a great place to finish. We've had a really excellent conversation. Philip, I thank you so much for coming on the show and sharing your journey with our listeners. So can you tell the listeners if they want to hear more from you or get in touch with you, is there a way they can reach out?
Well, absolutely. I'm very happy for you to leave down my email address should someone does request that from you directly.
Okay.
So that is absolutely fine. You could reach me out on Twitter if you want, but I don't quite recall my handle at this stage.
It's all right. We'll put it in the show notes.
Ipsy-dipsy.
That's fine.
But my Twitter handle is a combination of a lot of comments involving geopolitics, investing, my personal thoughts. So please don't get offended, anyone. And if you want to follow me with caution.
That's all right. Like you said, it's about different sources and putting the dots together. So, I certainly think it's about the more sources you're looking at, and the more that's prompting you to think about things. So we'll put that Twitter handle in the show notes for anyone who wants to take a look. So before I say goodbye for today, if you have any feedback for me about this episode or any ideas for future podcast topics, please let me know in the YouTube comment section, or you can send me an email at contact@nucleuswealth.com. Did you know also, and hopefully after listening to this episode, you do know that Nucleus Wealth offers personalised investment portfolios. We can also give you some limited investment advice around that. You can find out more at nucleuswealth.com or give us a call on 1300 623 863. And finally, if you know anyone who you think would get something out of today's episode, maybe a colleague, a family member, or a friend, we'd love if you share it with them to help our show grow. Thanks again for tuning in from myself and the team, and I look forward to catching you at the next one.